Hi everyone, welcome this time Squaring Finance. Well, last week was pretty naughty actually, and it was good to bond investors, but more ridiculous from a big picture or long-run point of view. All of this crazy market situation come from the drama queen Trump. So as usual, let's start from the overview of last week's bond market situation, alright? The total bond yield curve was downward and steeper compared to the week before, with 3, 5, 10, and 30 years decreased 9, 7, 4, and 4 basis points respectively. If we put last week's bond yield curve and the one of last December 9th together, we can see that the curve was still twisted with long-term bonds downward. 3 years term increased 5 basis points, 5, 10, and 30 years terms decreased 9, 26, and 25 basis points. After actions of investment agencies, agricultural and commercial banks sold 46 billion long and ultra long-term bonds, whereas funds bought 124 billion. Until last week, bond yield spreads between Chinese government bonds and covered bonds enlarged. For example, the spread between 10-year Chinese government bonds and commercial perpetual bonds enlarged 5 basis points to 59 basis points. I have to say that I never expected this dramatic decrease in momentum last week. How can a president become so lunatic? 125% tariff on China? What the fuck did Trump think of? What's the gimmick in these irrational actions? Well, let me tell you what Trump did to China's bonds market. For fundamentals, PPI and CPI data was released last week, which were minus 2.5%, lower than previous one, and minus 0.1%, better than previous one. These are long-term scanner factors, so they hardly show significant change within 1 month. Anyway, they showed some information with last month's data, and they also won the major roles of last week, so let's just skip these two, alright? Now let me introduce the superstar of last week and the savior of bonds market, Trump the crazy himself. Let's review what he did last week. First, he announced to impose 20% tariffs on all countries, and another 34% discounted reciprocal tariffs on some special countries, like my homeland, China. Without doubt, our country took its retaliation with very justice. We also put 34% tariffs on commodities imported from America. Then, Mr. Trump said that he will put another 50% tariffs on China if we don't withdraw our countermeasures. Man, all I can say is, what is this supposed to mean? Is there any sense? So to April 8th, the total tariff on China is 84%, and it became 125% on April 10th. Well, I lost my voice here. As responses and countermeasures, China imposed the same level tariffs to American commodities, and doesn't play this stupid game anymore. So since it was become a death spin, the world economy was dragging into the recession abyss by Mr. Trump. Without questions, the economic prospect of China may face more risks and have more difficulties because of this death spin. Some finance informations therefore downgraded their estimated value of China's GDP of 2025 by 1 to 1.5 percentage points. All of this unexpected and irrational bad news stimulated the risk-embraced emotion and caused the total bond yield curve went down 10 basis points first, then rebounded 5 basis points after. Trump must be a long side in bonds market. About funding condition, the gross funding environment was getting loose in last week, and have become even more loose since last Thursday. The composite financing price for non-bank agencies was around 1.8% in first 3 days last week, then have decreased to 1.6% since last Thursday. The PBOC total squeezed 440 billion yuan liquidity last week. So the total environment was like tight through quantitative view, but loose in actual financing price. Token all, the whole funding condition was good to bonds market, and because of the need for hedging risks from Trump's tariff, the time for cutting RRR is approaching. But the necessity for cutting policy interest rates decrease. After all, the liquidity in the interbank market is sufficient for now. So what we should focus next week? First is the change of Trump's tariffs, as well as the performance of the equity market, to see if there are any concession or agreements about that. Second, the next week is a tax session, and there will be 100 billion MLF due, which might disturb the funding condition. Third are economic data and financial data, but which are crucial factors next week. So what is the best bond investment strategies in the near future? Although the total risk embraced macro environment and loose funding conditions support bond yields to go down, but considering that bond yields have already hit the previous minimum and experienced a 20 basis points decreasing trend within 10 days. So buying action is right, but risky right now. We should wait for some yield adjustment happening, which will be a good chance for buying. And it would be best to keep at least 30% of your total position to avoid missing the downward trend. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.